Welcome back, everyone, to week 34, and an interesting week in markets. And as interesting in markets as it was, I was honestly not following as closely as I normally do this week. It was a bit of a weird week for me. Sort of ended in a situation where it's like, well, I can appreciate you texting me that to my face. I know you knew I knew before you told me. So yeah, a very dramatically ironic week. Anyway, let's get into what happened this week. So what happened this week? Wow, did gold blast off. I honestly thought that after 1350 it would have to fight through 1365 area, but it didn't. Basically, as soon as it confirmed past 1350, it blasted to almost 1400 overnight. Boom. I got home and I missed 30 bucks or more of gold move, and that was at night. So yeah, that was weird, and it moved, and then it hasn't corrected in a significant way yet. Now, it's funny because for all of the sentiment is uber bullish in gold, most of what I've seen from the not outside of gold fans community is people saying, well, the sentiment's too bullish, so they're bearish, which is weird. Again, stuck on that word. But anyway, everyone is like, well, the indicator's at 94 or whatever, so that must be bearish for gold. Sure, that probably is bearish for gold. I mean, near term. The one thing I would say about these indicators is they oscillate very quickly. I haven't sold any gold or anything. One thing I believe I've mentioned in the past, but I will say again now, is I have less gold than uranium, but not much less in my personal portfolio, so I'm not going to chase here. And the other thing I would say about the move in gold is that while the miners did move up with gold, they still, based on their price action, based on where they are versus where they were, they still don't seem to be convinced that this is the real move in gold. And to that, I would say all of this skepticism, while it may be correct, it also may be, well, if it's wrong, well, it's healthy skepticism, but if it's wrong, then that would mean that it will eventually have to catch up. Now, am I super bullish near term in gold after it just ramped up 60 bucks in a week and hasn't really retraced and it hasn't gone down at all? It's hard to be, but that's good. And I mean, I fully expect at some point it'll move down a little, and that would be healthy. Um, and if it doesn't, I mean, even if it does, the miners still have to catch up. And if it doesn't, the miners, well, I don't know. But you just look around the miner space, look at how these things are priced, and then look at the leverage they have, some of them to gold, and some of them even the not marginal producers. Look, you have some things where you have a traditional superstar stock trading at 2.5 times cash flow at these gold prices. You know, somewhere in there, something has to give one way or another. And the last thing I'll say in gold is that if you look historically, when this thing trends, when it moves, I personally wouldn't fight it, because I wouldn't bet on mean reversion is what I mean. Because if you look, it can stay very overbought and very oversold for a long time. So I'm not going to play some algo mean reversion waiting for it to move back game in this case. One thing I forgot to mention about gold is that some people are saying that it's because of what's happening in Iran or with potential for war in Iran or conflict, I guess, in the Middle East that caused the move. I tend to be in the camp that it was Fed-based. The Fed finally kind of officially indicating that they thought they would be cutting rates. So I'm leaning more to there rather than the conflict bid, but again, could be anything. Elsewhere this week, in energy, it's not like nothing was going on there. We had a Section 232 leak. That leak stated that or implied that the suggestion would be starting at a 5% quota and slowly taking that higher over time. 5%, while it is significantly more than what is currently available, is not that much. It's considering about 50, if we were to assume 50 million pounds of consumption, that's 5%, 2.5 million pounds. Very doable. So we'll see if that gets taken, but still it's not official yet. I don't know if this will start the process of utilities thinking about what they're going to do or if they're going to wait for something official. We don't know. So it's interesting. It's interesting. It's not super out of the money US potential producer call type scenario, and it's also not nothing. So we'll see how that is. In the larger picture, I don't think it really affects things too much. But in the near term and stock prices, who knows? We'll see. Also in energy, more disruption, I guess you could call it, out of Iran and the Middle East and oil, and there's a whole lot going on there. I'm sure everyone has or knows about that, and I don't know how the extent to which people care or want my thoughts. I don't have many deep thoughts on that. I'm not really in oil at the moment, as kind of strikes me as one of those can go either way type things that I don't have strong conviction on in the near term. So that's that. So the other thing is last weekend, I was going to mention this because I thought it was interesting again, and I forgot in the video. But basically, I had met up with a friend on Saturday to explain the full thesis of uranium to them. And it took a while, and I didn't get through everything. But basically, when we started, they were saying that a friend of theirs had said, why? Why mining? Mining sucks. I guess the friend of theirs had lost a lot of money in mining, and they knew it was a terrible business. And it was funny because, in complete honesty, the way I started the why uranium was with a why not mining segment because it's truthfully not a great business. But my point was that even though it's not a great business, it hasn't been a great business for centuries. We still do it and we still need it. But my point for why I'm mentioning this in the video is people hate mining. And it's not the first time that when I've brought up either gold or uranium to someone, they're like, oh, yeah, but the miners. And that is honestly exactly what you're looking for if you're looking for investing in miners. You want to invest in something that people are just now, they're like, why? I don't want to do that. I don't want to lose money. And for sure, obviously, they've learned their lesson. They think they're right. And, probably in the near term and probably on the whole in the macro, this is not a great business. But if it's such a terrible business that nobody at any point should ever put money in it, well, then it won't be in business for much longer, and we're going to have to find other stuff to make stuff out of, and we're not going to be able to do it from material. So take that as you will. Now moving on to our first pick of the week, which is again Bannerman. Now, I always find it interesting looking at historically. You look at stocks. You look at Paladin before the last, well, before it went Paladin. And you just can see it was just a dead stock. Like it was just nothing, nothing, sideways, but nothing, slowly lower, not doing anything for years and years and years until, boom, it was gone. And then it went from gone to really gone, and then went from really gone to a thing that people talk about years after it happened. My point is that if markets were truly efficient, would stuff like that happen? Well, no. The point is that all these stocks with crazy potential if something happens don't always seem to price in the probability of something happening properly, especially when it's something big. And that is kind of what I see in uranium. I'm not saying Bannerman or any other stock is going to be the next Paladin. That is immensely unlikely. I'm just saying if you look at some out of the money, some high potential, some things that need something big to happen to move big, before something happens, they don't seem to move. And that is basically the last few months, years with many uranium stocks. They've moved up and down, but I mean move in a big way. And that's just what I think of when I think of Bannerman. You just look at last few years and basically nothing. I mean, up a little, down a little, but nothing. And I just find it really interesting if you're a big proponent of efficient markets to look at case studies like that, like what I mentioned with Paladin. And why does that happen? Well, that's another rant. But for today, we're adding some Bannerman, and that's pick one. Second pick might be a bit of a lackadaisical pick, but I have a point for mentioning it. I'm taking, well, we're NEXGEN is the second pick, and the point that I want to mention that goes along with that is there was a news article this week that talked about 30 Belt and Road reactors by 2030. There are 2 points there. 2030, I know I've seen some places that say NEXGEN will be ready in 7 years. I think it may be closer to slightly longer than that, but either way, around maybe slightly before 2030. Well, late half of the 2020s, let's call it that. But my point is 30 reactors, let's say they're average of 1 gigawatt, well, then that's an annual consumption of, let's call it 15 million pounds of uranium per year. There's basically one, you could argue about a few others of like almost or kind of, but NEXGEN is the one deposit in that time frame that is not in production now, and maybe fission also, but NEXGEN's clearly the biggest deposit that would be able to handle that that type of demand. And realistically, and I'm not saying it's going to be bought out to handle that demand. I don't think that'll happen. But I'm just saying, if you look later down the line at what the uranium demand picture could be like, it would be a good time to be in production. Could be a good time to be in production. I don't know what's going to happen between now and then. But the late 2020s feels like it could be a good time to be a producer of uranium. Could happen earlier, but I'm leaning towards now that it'll be a longer cycle rather than a last cycle. But again, if it's a last cycle and you're holding NEXGEN, I don't think you're going to do too poorly. But that's just my point here. Aside from, I had this point on the slide for weeks now, but I just don't think I've said anything. I think NEXGEN, based on if you look at the historical moves of like Discovery, the stock shoots up and then kind of orphan period goes kind of slides until production. I think the biggest risk, I would call it, for NEXGEN is that we are kind of in that orphan period and we could stay there for a long time. Now, I believe that the market dynamics are such that when the price goes up, NEXGEN will have to realize a certain amount of its value. Otherwise, it is the most obvious buyout target in the world because whatever. And yes, for now, it is one of the more expensive real deposits in a per pound basis, but strategically, there's a lot of value there. And so that's my point on NEXGEN for the week. And lastly, the pick of the week, third pick of the week is going to be actually a gold junior, and it's going to be Liberty Gold. Now, this has definitely missed the beginning of the move. It's up significantly, but Liberty Gold is working towards proving a thesis of having a very large, very significant mineable gold deposit. If they're right, if I'm right, that they do have as much gold as they hope, then it is significant. Now, if you look at some of the parts, they look, in my view, kind of cheap. But my understanding is they're going to try to sell some of those parts, and I think the move up in gold recently might help that case. Might not, we'll see. But my point is, I wanted to say that I don't hate any of the existing gold stocks in the portfolio. I haven't sold any. You look, we're up. It's just we're up. I don't know, 19% on Argonaut, 20% on Leagold, 28% on Equinox, and what 35% on Sandstorm. It's I don't know. For me, I don't. It's not that I think they're expensive. I just don't really want to be buying more of those at this point. I mean, if I were to pick one at this point, it might be Leagold, but I figured that this is a good opportunity for a speculative play on Liberty, proven management, big potentially relevant deposits, and they have good sum of the parts valuation. So that's my point on that. And after quite the exciting week, here's an update. And let's see if next week is half as exciting. And until then, until the next video, whether it's this series or another one in between, I wish everyone a great week and would love to hear comments as always. Hope you enjoyed. Till then, have a great day. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.